Hello, everyone. This is Carlos Lopez de Almeida, founder of the PlusX Fund, coming at you today on Saturday, February the 19th, 2022. Today, I want to remind all of us, why are we still in this market? Why are we holding our investments in the fund even while we're all still suffering negative 18 to negative 35% account balances? What are we waiting for? And is the bull market over or not? Let's get into it right now. Let me pull up the chart. This is the most important chart in crypto and in Bitcoin. This is the Bitcoin monthly chart. Each candle represents one entire month of trading price action. So take a look at this. This is going back from 2010 all the way till today. And the orange line is the most important moving average in all of crypto. It's the 20-month moving average. It's not the 20 daily, it's not the 20 weekly. This is the 20 monthly moving average. And there's no moving average more important because it acts as support for big bull runs. And when the price breaks below it, it goes into a bear market for a year or more. Same thing, supported the entire bull run, but when we ended the bull run at a parabolic market frenzy, euphoric top, and a huge crash ensued, and we didn't hold it, we crash below, and that's when we're in a bear market for quite a while. So what I want to show you is the 2013 market cycle. The 2013 market cycle was marked by a very unique one rocket ship up, a massive crash with two dumps, and another rocket ship up to the top. So you can see that here, the price crashed one time here, it bounced and crashed another time there. And this whole area here was 6 months of sideways action, including this volatility I just described. And remember that the 2013 market was 2 orders of magnitude smaller than the current market. So remember that when you have just a puddle, you can create a tsunami by stepping on it. But if that puddle grows into an ocean, it's a lot harder to move the price. In today's market, I mean, we got millions of more people in crypto, entire countries buying crypto, institutional investors, banks, ETFs opening up. We're definitely in an ocean now compared to in 2013. And so with so many more market participants, even on any one single given trading day, it takes a lot longer for the price to move through the order books. So if you multiply each day by as many days as there are in the year, you get a longer, slower market cycle, which is the basis for lengthening cycle theory. That's why each market cycle will take longer than the previous one. So remember this, in 2013, this area in this lull, this sideways period that had 2 dumps, took around 6 months. So now let's fast forward to the current market cycle. Let's skip 2017, which is just one long bull run, right? With some dumps inside, but over in the big picture, it's just one long bull run. And let's fast forward straight to the 2020 bull run, which led into 2021. And what was so amazing about that run up, which was fueled by having a bottom from the bottom of the coronavirus dump, that really helped this happen a lot. But regardless of what the reason was, we shot up like crazy from the bottom of coronavirus. This was a 20x increase in price. And no one ever thought that Bitcoin, in a market that was 2 orders of magnitude greater than the past, would be able to repeat a similar, price action as this. That was unheard of. That was unbelievable. yet it happened. And so we are emulating 2013. That was talked about over a year ago, but that story's not over. We're still emulating it. Because look at this. As I just explained in 2013, where we had 2 dumps, we are currently finishing 2 dumps over a wider period of sideways action. So we are still exactly emulating this double top, double peak market cycle, 1 and 2. Here's 1, and what's coming next? 2. And there's a lot of theories to support this, and there's a lot of evidence to support this. Let's erase that. So the first thing to note is that we went sideways right into the 20-month moving average. This all-important orange line that I told you about. Now what's happening now? We've gone sideways right into the 20-month moving average, and we've actually touched it. We didn't touch it before. So that's a big deal, because when we've touched it previously was after a market cycle top, when it was all over, and then we crashed down, we touched it, and then we fall below into a bear market. After the 2017 top, we fell down, we touched it. Well, we bounced. We also bounced here. You see this bounce? We bounced on both of these market cycles, but they were a dead cat bounce, and then we fell into a bear market. Is this going to also be a dead cat bounce, where we fall into a horrible bear market that takes a couple of years to play out, 1 to 2 years before we shoot up to our targets of $100,000 Bitcoin? We don't know. No one knows. All I can say is that the likelihood of this is very low. And we have on-chain analysis, on-chain evidence. We know for a fact that the Bitcoin blockchain and the production, the daily production rate since the previous halving has been cut in half, and there's very limited supply and great demand. We have to model demand just like any other market. We have no proof of the entire demand. But Bitcoin and crypto is the first asset in human history where we can transparently see the supply on the blockchain, and it's very limited. It's extremely limited. So there may be a dump down into lower levels through manipulation. People can manipulate the price, but it would be short-lived. We'd have buyers foaming at the mouth to pick up Bitcoin around these levels, and if we did fall here, this would be short-lived and we'd still be going up. The chance of that is far higher than a bear market, a prolonged bear market. So that's the consensus as well of pretty much every smart analyst in crypto. I would suggest you do your own due diligence. I would watch Benjamin Cohen's analyses. He has hundreds of videos. I would watch Eric Crown. I would watch Kevin Svensson. I would watch a lot of smart people who analyze crypto and even compare it to previous markets and the traditional markets. So the greater chance is that we do continue this bull run, and that we have played out our double top volatility, sideways action for a year here. Here it was 6 months, here it's a year, and that makes sense. And we can just quickly measure the market cycle lengths from the bottom. We'll do it on the weekly chart, which will give us higher resolution. And we can take the first bottom here, and we can take a market cycle length of 750 days, whatever. Let's put 750 there. And then we can take the bottom of the next market cycle was back here. Yeah, right there. And to the top of 2017. That's 1,064 days. So we'll put here 1,064 days. And if we take the bottom of 2018 to today, well, that doesn't matter. Before we do that, let's determine the ratio of these two market cycles in terms of time. That's 1.42. So we can give ourselves a 1.42 multiplier. This cycle length times 1.42 is this cycle length, which again makes sense according to lengthening market cycle theory, because there's more participants in this market, more people. It takes longer on any given day to just move the price around. So if we were to just arbitrarily multiply 1.42 times the previous market cycle's length from bottom to top, then what would we get? We would get 1,510 days. So now let's map out 1,510 days. Let's type it in over here. 1,510 days. And again, it could be give or take a couple hundred days. Nobody knows if this 1.42 multiplier is going to stay the same or if it's going to grow at a constant rate. It'll take a decade to even get a sense of some kind of regression analysis on these numbers, right? Because we only have 2 data points here. But who cares? We're going to use this for now. It makes sense just because markets should lengthen in time and as they get orders of magnitude greater. So let's take the very bottom from 2018. We're on the weekly chart. The very bottom was right here. And the current time is 1,162 days. So we're currently at 1,162 days. So let's subtract 1510 from 1162. And we have potentially 348 days left to be reasonable in our estimation of how long the current market cycle should last. So if we take out 348 more days from today, from this week, that takes us to January of 2023. So that means it's very reasonable for us to say that it will take the rest of this year to continue moving up, just like 2013 took its amount of time. And we're playing out a similar type of market. You can see we're going to have some action over here. Who knows what will happen? And then we'll move up. And we will make a lot of money as this moves up. So here's scenario 1. This is the bullish case. And scenario 2, some dead cat bounce. Actually, yeah, some dead cat bounce into a prolonged bear market before moving up. I'll draw this bear market scenario in red. So we have one of 2 options here, the bearish case or the bullish case. Now, in terms of the bullish case, we stand to make a lot of money. Yes, we are suffering right here in this period. We have been hit around 35% since December, when the dumping of the market continued violently. It was a massacre, And as you can see, we've found our potential bottom here at $33,000. And we're most likely going to have some kind of sideways to uptrending market coming up where we're going to recover all those losses. So just bear with me with that. And we're well positioned here in the bottom of this violent dump, extended dump. We're well positioned down here with dollars ready to deploy into the market when conditions look good. And we're waiting for some kind of huge uptrend. We're mimicking the 2013 cycle. And what will happen? Bitcoin will get to $100,000 to $150,000, in my opinion. Some people say $300,000. I think 120, 30 is more realistic. And what will happen at that point? We're going to get a liquidity swap. That's where people sell tons of Bitcoin and massive profits into altcoins, because altcoins then move up even higher than Bitcoin ever could. And that's exactly what happened at the top of this bull run. It actually started after Bitcoin hit $42,000 in January of last year and declined for about a month, and then moved up again to 59,000. And around this period of time, people were selling massive amounts of Bitcoin for altcoins. And in this area up here, you can see 100x gains in leveraged altcoin trading, which we were not a part of because we weren't positioned to be a part of that back then. We weren't a fund. We were just starting. We were coming out of, I personally was coming out of heavy losses in tourism business and other things, and coronavirus. I just wasn't positioned to take advantage of what happened. But we've studied it. We've been studying this for months. We know how this played out. We know how it played out in the past. We know how it played out in 2015 and 2013. When Bitcoin runs up to a higher level, there's a liquidity swap, and that's guaranteed. When Bitcoin reaches really high levels, it's sold into altcoins. So when Bitcoin hits 100,000 or 150,000, whatever the top price of the market is, we're going to have a liquidity swap. And then we won't have like 100 to 200x gains on the charts like before, but we will have like 40 or 50x gains, as the rest of this move is relatively smaller than the first move. So, and out of 50x gains, we're going to easily capture 10x in our trading. So at the end of this year or early next year, we have a 10x coming, and that will be multiplied by whatever gains we're able to make this year. And if we have an uptrending market going from $40,000 currently up to 100,000 before the liquidity swap, well, we're easily going to make a 2x, maybe twice, which is pretty conservative. So, we could make a 3x and then another 3x, which together is a 9x. But even if we're unable to do that well, if I can only pull a 4x over this current year, we're going to quadruple our money before Bitcoin is up at these top levels where there's a liquidity swap coming. So a 4x times a 10x is a 40x. So I'm reasonably, without being out of, staying within reason, staying semi-conservative, I have a great chance to make the fund grow by 40x by the end of this year. That means if you have $3,000 invested in the fund, that'll grow to $120,000. And the fund will be worth over $10 million as a whole. That's our target. That's what's coming. And that's the bullish case. Now look at the bearish case. If that actually never happens and we actually do roll over into a prolonged bear market, and there's actually no buyers foaming at the mouth to buy up Bitcoin down here, and it just goes sideways, which is completely, extremely unlikely. Don't count on that. But, it is possible. Everything's possible. So if that were to happen, then the fund will start trading in the way that I put out in the white paper. And our white paper is coming out very soon, and it serves as proof that in any market, but especially in this type of horrible bear market, we'll actually trade in a style that has equal weights of long and short, more or less equal, and we'll be able to generate ongoing, reliable, continuous compound interest in our Bitcoin while we wait for this prolonged, kind of dead, boring bear market to play out before the next major run up, which could happen in 2024 very easily, because there's another halving in 2024. So even if it took that long, we would have 2 years or 1.5 years of compounding before that were to happen. So no matter what the outcome is, you should definitely buy Bitcoin at these levels, because it's as cheap as it's ever going to be again in history, give or take a few $1,000s in the price. And it's the bottom of the future range, and we're able to compound. You want to invest now while we're able to compound. And if the bull run is going to happen any month now, then we also stand to gain 2, 3, or 4 times our money before ultimately multiplying that by another 10 when there's a liquidity swap after Bitcoin hits an all-time high price. Our white paper is now coming out very soon. We've been working on it nonstop, and the first draft is coming. You're all going to be able to read it and see for yourself why our compounding strategy is mathematically and historically proven to it will work. So that's it. That's why we're in the market. That's why we're waiting in negative balances in this horrible period right here. That's why we're in it. That's why all of you should buy more Bitcoin for your future right now. And anyone who trusts and has confidence in what I'm doing should invest a percentage of that into the fund, especially now when there's drawdowns. It's a time to buy. When everyone is negative 30%, that's when you should jump in or add more money of your own so that you average out your cost basis. And later, when this moves up, you'll be in greater profits than if you do nothing. So again, thank you guys so much for your time. Thank you for understanding what's going on here with me and letting me clarify this for you. Trade safe, everyone. Have a great evening. Good night. Bye-bye.